Hello and good morning to all the European traders out there. I'm just going to do a quick rundown, a video of the EUR-USD for today's trading and what I expect to happen. Obviously it's NFP day today, so we should get some volatile price action. Okay, so it's in this intermarket analysis bringing you the EUR-USD. Okay, so first of all, let's try and run down the summary of the fundamental arguments for and against this pair to go higher and lower. Okay, so obviously this pair to go higher. Okay, so yesterday German PPI data, inflation data, came out slightly better than expected, so that's an argument there for it to obviously sustain its move higher. That's why it's done pretty well this morning and obviously overnight and yesterday in terms of holding its strength against the dollar whilst all of the currencies were coming under pressure. Obviously this morning sterling is under quite considerable pressure after having held the or almost touching the 1.62 level yesterday. So also the Aussie is under pressure as well, mainly due to obviously commodities getting hit yesterday. Obviously copper weaker, obviously oil considerably weaker, and gold has been consolidating for the next move higher, which I'll discuss gold obviously later on in a different video, not now. Okay, so basically the argument there is stronger German PPI data for it to move higher. Obviously tapering delay, given the fact that the US government shut down. Although we do have NFP data today, obviously a lot of Fed members have been coming out saying that there's not enough information to base their judgment or decision on tapering, so that obviously supports a euro versus a dollar, i.e. a weak dollar, so the euro obviously moves higher. Also the fact that the ECB have remained quiet, haven't said anything regarding any potential intervention in helping their exports, or they are obviously concerned about exports, especially considering the weak German forecasts last week that was flashing off. Okay, so obviously the fact that the US dollar also is weak due to the downgrades by Fitch and De Gong, being the most important because the Chinese, there's obviously they are very concerned, and also there's a good article on CNBC at the moment, obviously just putting forward their argument that the actual downgrade should be taken from a obviously international investors' perspective. The other argument for the EUR-USD going higher is the nutter, I personally call the mad woman, Yellen, okay, who's in control now. They claim she's an ultra dove, but yet we have to see exactly what she's capable of. Okay, so obviously the jury is still out, but apparently they say that she is worse than Bernanke. So the fact that Mr. Larry Summers didn't get obviously walked in and he got the boot early on, and the fact that she came in obviously again is dollar weakness. Okay, so these Yanks love to destroy their currency. Okay, now debt ceiling obviously postponed, like I've already discussed, and also kicked the can down the road. So again, that's still negative potentially for the dollar. Obviously with it losing its reserve status as well, or losing its credibility in terms of reserve status, obviously, and also the downgrade of the US growth. Economists estimate that a 16-day government shutdown has shaved as much as almost 1% off annualized GDP. So again, that's a little weak for the dollar as well. So all those combinations put together, obviously generally arguments are it's weak for the dollar, but then again the counter argument is that the market's already priced that in. Okay, given the fact that you've got EUR-USD almost approaching 1.37, obviously failing to penetrate higher, especially after the fact that we had a beautiful H&S formation top. Let me just zoom in here, show you, nice H&S formation top, and as soon as we've got De Gong and Fitch obviously downgrading the US AAA status, etc., coming in and talking down the currency, then obviously that led to a short squeeze in the right shoulder, and obviously we went higher and we touched the previous resistance level at 1.37. So that's an important factor there. Now let's go to our smaller time frame, so a 4-hour chart. 4-hour chart, obviously it's just consolidating here. The previous high is acting as support. Okay, so previous resistance equals support, and it's consolidating. Okay, although it does remain vulnerable to further breakdowns because the 60-minute chart is quite interesting. We've got a potential H&S formation here down to 200 MA, so we need to keep an eye on that. Now obviously if that H&S formation plays out, we always need to be wary of the daily chart, and the daily chart has a gap below, an unfilled gap around the 1.33 level. Obviously that's a large ask given the situation at present, but given the fact that it's NFP day and the market's been quite euphoric, everybody may well have misinterpreted this new woman, Miss Yellen, as being ultra dovish. Obviously, expectations shift, then especially on an NFP day, that can't be ruled out. Okay, so that gap being closed. So always take into account every probability or every possibility in the markets, and never discount, obviously, or ignore anything at all. Now, a 10-minute chart, you've got a H&S formation, which, to be honest, the neckline is broken now. You've got inverted head and shoulders again, which again the neckline is broken now. So there's a lot of noise, a lot of chop here on the 10-minute chart. So we'll try and take it for what it is. Okay. Now, the most important chart really is the USD or the US dollar index at present, because that's a multi-week support. I showed that chart in the previous video, so if you keep it, have a look at there. On the weekly chart, the USD is obviously at critical or major support, shall we say. Okay. Now let's have a look at its pairs. Now, one of the pairs that I tend to look at and observe, because it's classed as a risk currency, is the Aussie USD. Now, the Aussie USD on a weekly chart basis is obviously slap bang into resistance. So therefore, one would assume, based on intermarket analysis, or presume that the EUR-USD will be at resistance as well. Okay, the daily chart, again horizontal resistance. Okay, on a 4-hour chart on the Aussie USD, we are just about holding this trend line here. Okay, and a 60-minute chart again has a H&S formation, which is in concert with the EUR-USD. Okay, so if you just bear that in mind, again using intermarket analysis, one would presume that this would be going down, especially given that the oil price has fallen yesterday. So that could be a leading indicator. Okay, not could be, is a leading indicator telling us that this could potentially move down, obviously with equities as well, adding the fact that the FTSE, which is the previous video I've done, discussing the fact that the FTSE is at resistance and the US markets are at resistance, therefore US dollar should catch a bid, or the fact that the US dollar, obviously a lot of individuals are heavily short, therefore a short squeeze will ensue, given the uncertainty regarding NFP, and the economic data with regards to US may well come out better than expected, and the unemployment rate may drop as well. Okay, so again that can all lead to a short squeeze, especially with the market obviously pumped on QE, okay, and the euphoria regarding the rally that we just recently had. Obviously that can all quickly unwind, and money can flow towards gold, bonds, obviously, and the US dollar. So just putting all that into perspective for the EUR-USD, obviously we're observing our levels, observing our key trend lines, etc., and we'll see what the NFP data will bring. Okay, thank you very much. Goodbye now. And always remember, risk on, risk off, wax on, wax off. Goodbye now.